Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be teaching you guys how to trade the 1 minute scalping strategy. Before I start, make sure to like and subscribe to the YouTube channel. In this 1 minute strategy, the 1 minute scalping strategy, the major time frame in which we'll be using for this strategy is the 15 minutes and the 1 minute. We will be deriving our bias from the 15 minutes and we'll be using the 1 minute for entry. Now, in the end of this video, I'll be showing you guys a live example. But first, I'll be pointing out those major areas for you to look for those trades. What are the major patterns you need to see in price to define your bias? And I'll be drawing out those patterns and explaining how you can implement those patterns. First, let's talk about the trend continuation. Now, in a trend continuation, whenever the 15-minute creates a swing high and a swing low, swing high. Already identified this trend as an uptrend. Price retrace to a 15-minute point of interest. You look for your entry after a 1 minute shift in structure as your entry time frame. Your target should be price to run out the buy side liquidity, the swing high. This is called a trend continuation pattern. Point of interest can be a fair value gap or an order block. This is a trend continuation pattern. The same thing goes to a sell bias. Price forms a swing low, retracement to a 15-minute point of interest. Look for your 1 minute entry. Your target should be for price to run out the sell side liquidity. And the point of interest can be an order block, a fair value gap, whatever point of interest price retrace to, you use it as an entry. The 15 minutes will be defining the bias. You'll be deriving your bias from the 15 minutes, and the 1 minute should be your entry. At the same time, we have price running out buy side liquidity. Price takes out a buy side liquidity, look for a shift in structure. Normally, I do call this a counter trend because it's mostly going to be against the actual bias. But if it's aligned with the bias, makes it a strong probability. Whenever price takes out a buy side liquidity, you look for a retracement, look for an entry after the 1 minute shift of structure to a discount point of interest. Now, the point of interest might be a fair value gap within this price range, but if there is no fair value gap, your overall target should be price running out the sell side liquidity, which price was to take out the buy side liquidity, retrace to run out the sell side liquidity. I normally call this the counter trend bias, or you can call it a liquidity sweep, how to trade liquidity sweeps, but I normally call it a counter trend. You need to understand it when you're trying to trade the lower time frame. The same thing goes to a sell. Whenever the 15-minute takes out a sell side liquidity, 1 minute shift of structure, you target the next draw on liquidity, which it can be a 15-minute fair value gap, or if there is no fair value gap within this price range, the same thing goes to the idea of looking for price to run the buy side liquidity. So these are the major patterns in price for you to use as a catalyst to identify your buyers. Now you can personally take screenshots of this so that you can study this on your own personal time. Understanding more about it is very important whenever you're trying to scalp on the 1 minute. We are looking for those short-term trends to capitalize our trade on. And these four patterns will give you the short-term trend. Whenever price takes out a buy-side liquidity, you anticipate a reversal. Now, in this reversal, you can apply a candlestick pattern. I will do more series on this, talking about more trades example, more live trade example on which if I were to see a good reaction from this video, if you guys could bring out this video to a good reaction where I see a lot of views, then I'll be doing a series two of this 1 minute scalping strategy. And in those series, I'll be using a live example, explain on those key features for you to apply to the trade idea. the trade plan. So understanding, writing down this trade plan is very important because I will be giving out more trade examples and more key futures and more key confluence for you to add up to this trade plan. But the overall based plan of this trade plan is understanding these four patterns. First is the continuation pattern. Whenever the 15 minute is ready to expand higher, retrace to a 15-minute point of interest, you anticipate a 1 minute shift in structure, and your next drawn liquidity should be the buy side liquidity. The same thing goes to the sell. Whenever price have a clear trend of trading lower, whenever price retrace to a 15-minute point of interest, you wait for that 1 minute shift in structure. Then you can anticipate lower prices to take out the sell side liquidity. While if price were to take out the buy side liquidity, you anticipate price to do a shift in structure for a counter trend. This can lead to a complete reversal, but mostly I target the next draw on liquidity after running out the buy side liquidity. Once I identify that the 15 minutes is creating a swing high and there's a chances of price retracing to that point of interest, either a complete reversal to run the sell side liquidity or just a retracement down to a discount point of interest. The same thing goes to the sell side. Whenever price takes out a sell side liquidity, I look for a shift in structure after identifying the swing low. After identifying the 15-minute swing low, I look for a counter trend to a premium point of interest, either a premium fair value gap, premium order block, or a complete run of that high to take out the buy side liquidity. So applying this pattern is very essential in understanding the 1 minute scalping strategy. So take your time, take a screenshot of this and go through this. Try to apply it on the chart, which I'll be showing an example where I'll be applying it to the S&P 500. I'm on the 1 minute of the US 500. On the US 500, I was anticipating lower prices after identify a 15-minute retracement after a run on a buy side liquidity. The next draw on liquidity on a counter trend is surprised to run the sell side liquidity. So this pattern is very simple. Whenever the 15 minutes takes out a major buy side liquidity, in most cases there'll be a retracement down to a 15-minute discount point of interest, so a discount liquidity. And a discount liquidity in this trade is the sell side liquidity, as explained in the example. So price took out the buy side liquidity, which is this high. After a run on the buy side liquidity, waited for a confirmation to take a sell from this high. But I did not take a sell from the high. I waited for more confirmation for price to retrace lower. Took a sell from this other block, waited for a complete retracement to run the sell side liquidity. Now you can go more aggressive from taking a trade from this high, but I waited for more confirmation to take a trade. Going into more details on this trade is to understand that I do wait for a candlestick confirmation from the higher time frame, from the 15-minute time frame. In most cases, I wait for price to form a swing high, or I want to see price run the previous candle's high. And when I identify that shift in structure, then I can take a sell. Make sure you take note of that. There are some times where I do wait for a candlestick correlation. When the candlestick is giving me a clear confirmation to that bias, I use it as an entry. On the 15-minute time frame, you can see the trade more clearly. Price respected 15-minute fair value gap, traded higher, took at the buy side liquidity. Price retraced back to this other block, traded below the mid range of the other block. That gave me the confirmation when I say wait for a candlestick confirmation below the mid range of the other block. After price traded below the mid range of the other block, gave me a confirmation that price is running out the sell side liquidity as a next draw on liquidity, which means price is using the buy side liquidity as a premium price to run a discount liquidity. Whenever you're using the 15 minutes, make sure you derive as more idea from the 15 minutes before taking those lower time frame setups, which are very important. Now, There was a trade example that I did posted in the 2025 community where traders said that I've taken multiple entries, which you can see in this trade, I only took one entry. When you turn the execution mark, you can see after price traded to the mid range, retracement back to this other block. After price traded to the mid range, you can see retracement back to the other block. The only trade I executed. Took a sell, stop at the high, waited for price to run the sell side liquidity as my draw on liquidity. Currently, price is close to the take profit. Just a little bit move to run out the take profit. Remember, this is a demo account. I normally don't have access to trade directly from a trading view platform because I normally use a CFD broker and a prop account. But this is a demo account that was used for this example. That is all for this video. See you guys in the next video.